Good morning, it's March 11th, 2017. My name is Jim Whitley. We're going to do a little weekend review here and a look ahead. As always, be sure that you're trading your plan. We're going to show you some signals here, so I just want to go over what kind of the rules are on my signals. So the Whitley trading signals are based on a combination of the MACD and the slope of the 22-bar EMA. So a buy signal, or shall we say mindset, is projected when the two indicators sync. Here's a list of stuff we're going to go over here this weekend. We can see that right now I'm kind of holding on to VTI and SPY and a little bit of biotech. We're going to break all this stuff down here. Let's start by looking at the major indexes, VTI, SPY, the Dow, QQQs, and IWM, all of which, except for IWM, have a weekly buy mindset. The only thing that's flipping to a sell side, it's more on the daily, is the IWM, the small caps. Looking at the charts here on those, VTI, total stock market, did close above the 5-day. The 22-day on that comes in around 121.22. Kind of a tricky day Friday, but it did manage to have a fairly decent close. Noticeably still some weakness here in the MACD. Same thing with the SPY. We can see it down here as well. The 22-day on the SPY here then would be around 235.42. Dow found some support, DIA I should say, found some support around that 208 level. We can see the 22-day would be about 207, but boy, that hasn't been touched this year anyway. Noticeably here on we still have some weakness in the MACD department. The Qs, the 11-day here comes in at 130.59. The base that we were looking at, it still has that base at the 129 level. Small caps, we're back here into this range. We're still closed underneath the 50-day. Things are kind of bending around here. If we take a look at bonds and real estate, weekly there we're kind of setting in neutral, however, all of which are on a mindset of selling here with the daily stuff. TLT 115 would be a key level here for it to hold. We'll see what happens with that. If you look at that on that was the monthly. On the weekly here, we can see that level and see that the weakness, in the 22 bar is still happening. It's trying to keep things together with the MACD. The 10-year stuff, IEF, does have some Fibonacci support around 102. And real estate, pretty ugly candle here last week. Take a look at that on the daily. It's trying to hold that little bit of support there that it has at 76. Should that break through, we're looking at the next Fibonacci level around 75. Looking overseas and at also at oil and gold, our developed stuff, developed markets. 62 EFA here would be an interesting spot. See how that Fibonacci line is right here. If it's able to ever clear that, then we can worry about some other things. But there is some strength in the MACD. Looking at that on the daily, let's just keep a reference of this 22-day here at 60.45. The emerging market stuff, EEM, the 50-day here is around 37.52. We can see the channel's kind of been stepping up, but we are at the lower end of it where there at the moment with some weakness in the MACD. So we'll have to see if we're able to hang on to that, to the 50-day there or not. Looking at oil, boy, I took a small beating on that last week. I was trying to play around with it. It's, if you're looking at the USO, I mean, we're in a spotty area here right now, and that's where we're kind of sliding down to. Let's take a look at the crude chart, because we're at this Fibonacci area right there. It's pretty weak. So I mean, the next Fibonacci areas to look at would be around $47, and then of course down here around 45. Gold, if you trade the GLD, you got a little bit of support going on here at 113, but there is some weakness in the MACD. If you take a look at actually gold itself, I mean, around 1175 to the 1180 area here is some possible support. We'll see what happens with that. Looking at some of the sectors, starting off with IBB, I mean, I am in that a little bit here. We have some neutral things happening, with the IBB as well on the daily. Let's look at the chart. So on the weekly chart on biotech, 320 is the Fibonacci area of interest. I mean, if we're able to get through that, I mean, 340 then would be, the next sticky spot. We'll look at this on the daily, and we see that we found support here around 295. Let's be mindful of the wave counts, however. Remember, we were trading this because we thought this was wave 1, and then 2, and 3, and there's 4, and then it's 5. So if we're going to get 3 corrective waves, I mean, we have to be mindful of this, because that would be wave A. Wave B could be here, and then, next thing we know, we could be ending up with wave C down here before it takes off and goes higher. So, I mean, we need to be mindful of that. I mean, I'm in it here, and I'm looking for it to break, but it's also exercise a little bit of caution. Looking at the home builders, it had a slight close above the Fibonacci area here on the weekly. There is some strength in the MACD. 5-day and that Fibonacci support is around 3670. Materials held the 11-week at the moment. Kind of holding it together here for right now. If we look at that on the daily, that's kind of corresponding with this 50-day around 5168, as where it held. So we want to see if that can hang on. The bottom of the 22-day channel right now is at 5133. XLE, the energy stuff, it does have some Fibonacci. Well, it's actually a key Fibonacci area around 67. I mean, it's just been sliding. There's weakness here in that as well. So we'll see if 67, if that comes around, and see if that holds or not. If we look at on the daily, however, we can see that it's possible a little reversal around this Fibonacci area here. There's a lot of hurdles that would have to take place there, but I mean, just mindful of this candle, and we'll see what happens with it here. It could just extend down like we were looking at on the weekly chart. Financials closed at the 5-day. Still feels a little heavy though. I mean, the 22-day on that would be around 2449. Taking a look at the XLI, the industrial stuff, MACD still hanging in there. If we look at that on the daily, we have 22 days at 65.54. Noticeably, it's kind of sloping here a little bit. I mean, it did hold this support area right here that we were looking at a couple days ago. I don't know if we're going to get anything off of that or not. And let's take a look at, some other things that, all except for retail here. I mean, on our last list, we have some weekly buy signals and things are kind of in neutral. It's a steady ride of the 5-week moving average here with XLK, with the technical stuff. Still strong in the MACD. If we take a look at XLK on the daily, the 11-day here now would be around 52.72. Consumer staples, XLP, 56 would be a double top area to watch here. We do have strength in the MACD, however. It looks like, it's very possible we'll get to the 56 and then take it from there, see if that is a double top or not. It closed above the 5-day. Same thing with XLU. 53 is kind of a double top area here. We do have, the chart kind of looks the same as staples, but strength in the MACD. The 22-day on that is at 50.51. Healthcare is at the current top of the Fibonacci range here. It's still got strength in the MACD, so hey, I'm looking for biotech to break. Who knows? Maybe healthcare will show something new to us as well. The 11-day on that is around 75.20. Consumer discretionary stuff did manage to close slightly above that 5 and 11-day. The 22-day on that comes in around 86.36. Retail, if you recall, we had some double sell signals on that. 41 is going to be a key spot to look at here. Here's that 41 level right there. Right? We see weakness in the MACD. The 22-day is right now sloping down and is at 42.97. So here's a quick review of the signals that we went over there today. And you can connect with me on Twitter and Facebook at Whitley Trading. Emails can be sent to jimwhitleytrading@gmail.com. Y'all have a fantastic weekend, and we'll catch up with you here on Monday.